Capital revenue, question number 6. Further explain. A large sum of rupees 50,000 was spent on advertising a new product. Deferred revenue expenditure. Explanation. Advertising creates long-term benefit for the business by increasing sale and brand recognition. Even though it is a revenue expenses in nature, not creating a tangible asset. The large sum spent will benefit the business over multiple years. Thus, it is treated as deferred revenue expenditure and written off over time. Medicine were purchased for rupees 50,000 and rupees 1,000 were spent on carrying them to the hospital. Nature, revenue expenditure. Explanation. Medicine are used for immediate consumption in the hospital's daily operations. The rupees 1,000 for transportation is also part of the cost of getting them ready for use. Therefore, this expenditure is classified as revenue expenditure because it does not create any long-term benefit. Sports material were purchased worth rupees 10,000 and transportation charges rupees 500 were purchased. Revenue expenditure. Explanation. Sports material like medicine, bats, वगैरह eat are for immediate use in operations. They do not create any long-term asset for benefit. Transportation charges are part of the cost of acquisition and therefore are also classified under revenue expenditure. Freight and cottage on the new machine rupees 300 and erection charges rupees 400. Capital expenditure. Explanation. Freight, cottage and erection charges are part of the cost of acquisition and installation a new machine. Since the machine itself is a capital asset, these expenses are added to its cost, making them capital expenditure. Rupees 5,000 were paid for the removal of a stock from old work to a new work. It is a revenue expenditure. The cost of relocating stock in a regular business expenses and does not create any long-term asset or benefit. Hence, it is treated as revenue expenditure. Further explanation about this question. Advertising a new product, deferred revenue. Medicine and transportation to hospital, revenue expenditure. Sports material and transportation charges, revenue expenditure. Boundary wall constructions, capital expenditure. Freight and erection charges on machines, capital expenditure. Removal of stock, revenue expenditure. Next question with answer.